I made it a little over $1,500 in 60 minutes this morning. I consistently find trades just like this one before work. Let me walk you through the strategy I wish I knew as a beginner so it doesn't take you the 5 years it took me to become consistently profitable. So every morning I look for the key areas of support and resistance that the market is currently going to be respecting. And so looking at this chart of oil right now with the market currently trading right here, just looking at where it's previously bounced, these zones I'm drawing are areas where I likely think that the market could bounce again. And so when it comes down to this level, I'm gonna look for a potential reversal. That's all I do is I look for reversal trades because I found that they give you way better profitability over the long run. And so I draw these levels off of a 15-minute chart. I trade futures. You can really trade whatever you want, and on different time frames you can use this as well. But the whole idea is drawing these zones off of a larger time frame makes them stronger because the larger time frames are more likely to be respected. And then once I do that, I just wait for the market to come down into this level, look for a simple entry checklist that I've developed over the years, and I jump into a trade based on that. So going into a smaller time frame chart, now we're looking at a 1-minute chart. Every morning I start trading about 6:30 on the West Coast, and I just wait for the market to come into this level. And so we're in this larger support zone, and so I'm just waiting for signals to show that the market is going to reverse. And so the first thing in that signal is assuming, okay, when is this downtrend going to break? The whole idea with trading the markets and predicting things, the market has 3 trends. It'll go up, sideways, and down. And so when I first started trading, I always heard that, just trade with the trend is your friend. If you buy somewhere in here and you just spot where the trend keeps going up, you can make a ton of money. And I always found that that was really hard. What happened most of the time is when I jump in, I would jump in right here and the trend would either start to go sideways or reverse. And so I realized that what I could do instead is start to try and predict when the market's going to do this, go from sideways to down, and you can have a way better risk reward ratio as well, where you risk, let's say $100, and you can be making $300 or $400. And so you can get a lot better risk reward return. And instead of trying to jump in on a trend when you aren't really sure when it's going to continue, you're waiting for that trend to slow down and reverse, and then you jump in and get in based on that. And so the first thing for that I realized was, okay, I have to make sure to know when is this trend broken right here. And so that's kind of the first step is, you can see we're in a solid downtrend, and we're actually breaking out of this big support level that I drew off of a 15-minute chart. And so what I want to do going forwards is, okay, where is there just a simple trend line? And so kind of this doesn't really match. And so I just go off the basic philosophy of just do what works, what matches. There's no hard and fast rule of it has to perfectly, touch this and hit this exact spot. It just, it's pretty clear to understand, okay, here's kind of the downtrend that the market's in. And, at this point, it's clearly broken that. The whole idea is just seeing when that momentum is starting to switch. It's not about trying to jump in right when the market bounces like this, because that's honestly impossible, and that's gonna lose you a ton of money because you don't know when the market's going to do that. It can just be kind of random sometimes, and so it can look really good in terms of risk reward if you just got in right at the bottom and then the market just shoots up, you can get 10x. But my experience is that's really hard to do. It's better to wait for the confirmation that it's okay, it's starting, and then wait for the market to make some kind of pullback like this, and then jump in based on that. And so that's kind of my first or second step, really. The first step, is waiting for the market to come to one of these levels. If you don't wait for it to come to a bigger, important level, then you're just going to be trying to reverse the market randomly in an area that doesn't matter. And if you look at kind of the big picture, if we go back to the bigger picture chart, it's more likely to reverse at these extremes. It can totally reverse randomly here in kind of the middle of the range, but generally what I found is if you reverse at the more extremes, it's more likely to give you a larger reversal like this. And so that's what I kind of target, is you're going for the almost sure thing. Now, of course, there's nothing in trading that's a sure thing, but the idea is that this is more likely to kind of be a home run in a way. And so the next step that I like to see is I like to see that momentum switch. Is, you know, right here, these on my chart, my bullish bars are white and my bearish bars are blue. But essentially, I want to see a bunch of bullish bars. And these bullish bars right here really show a lot of that momentum starting to shift. Because if you just look at this trend, it was kind of just down, 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 down. And if it would have kept going down, it probably would have kept doing that. And so instead, there's a clear shift and a break and a switch like we're kind of looking for, a potential start of this, and which can potentially start a bigger move. And so part of that as well, what I like to see is essentially a trap where the market essentially baits people into thinking that the trend is continuing lower. And so how that plays out is the market bounces here, starts to go up, and then you can see it has a bunch of big bear bars here, and it looks like it's going to continue lower. And so a lot of people that are seeing this trend, you know, like me in the past, continuation traders, they think, oh, this is a pullback. Look at this momentum. It's going to break out here and keep going lower. And so they're going to try and jump in thinking that the trend is going to continue lower. And in reality, this, for me, I've noticed that this is a signal that we're actually starting to slow down and we might start to reverse. And so the old me would have jumped in here betting that the market's going to continue lower, and I would have had a loss, and it would have just been very, very frustrating. And now I've started to realize that no, this is the market essentially showing that it's starting to reverse. And so here it kind of makes that trap, pushing people lower, and you can see it's also making a double bottom. Super basic signal. You do not need very fancy patterns or indicators to be consistently profitable. You can see all I'm doing here is a simple analysis of what the trend is doing and the candlesticks are doing, and that's all I use. I've tried to use indicators and fancy patterns in the past, and really just looking at for these simple patterns has consistently made me money. Compared to before, trying to do all that fancy stuff, it just didn't work out. And so essentially right here is I am looking for that pattern to happen. And so to quickly look at the final confirmation I like to wait for is I want to see this little mini trap here push the market lower and then get rejected. And so that's what I see in kind of these three candlesticks right here. Is it's got a bullish bar, kind of a doji here, and another doji. And this actually candlestick, well, I got a recording to show you of me actually entering in the trade and showing you how I manage it. And this one actually was bullish before it closed. And so, but it ended up being a little doji, and that's totally okay. The idea is it still kind of made essentially a little bottoming pattern. And so the next candlestick was then a really strong bullish candlestick. And so what this does is it's showing you that momentum switch. And so once I see that confirmation of that strong candlestick, I actually have a drawing tool that I use that I've created for NinjaTrader that tells me I need to enter into 3 futures contracts to hit my risk target of roughly $700. And so I essentially try and target actually $800 of risk every trade, but depending on where my stop loss and my entry is placed, that'll depend on how many futures contracts I trade in. So not to dive into this too much, but essentially all this does is it helps me figure out how many contracts to trade, and then it just says, here is my profit if I get to 1x, 2x, or 3x. And so if we go to the recording now, that's the tool that I use to tell me, okay, I want to put in 2 contracts here. I want to go long if this candlestick breaks above the previous candlestick. And so it broke above there. And so I thought that, okay, it's made that nice clean double bottom. And if it makes a little bit of a higher low here, I want to get in on this breakout. And so I jumped in long. I traded 2 contracts because I was actually planning to scale in. This is something I've started to do, which we'll talk about a little more in a minute. And so from there, I just bet that this market was going to go up. I put my stop loss below this double bottom. I always put my stop loss in a logical place based on the price action that is happening. And if you saw that there, I actually added on another contract. And so I've started to scale into my trades as I've got larger size. And what I did as that confirmation was I thought, okay, this is a really nice bullish candlestick like we just talked about. And I jumped in one more contract right there. And so I scaled in with the idea that, okay, I like the signal initially, but it's not enough for full size. And so I scaled in again with saying that, okay, I like the signal even more now. And so, my entry was actually like here and here, but the way the system works is it kind of averages out to your entries right here. And so from there, I just have to let the market play out. And the biggest thing that I have learned over the years is you have to let things play out. Watching this movement move around, you cannot do. And so you can see here on my recording is my candlesticks are red and green, and I have the money right here. And when I'm actually trading on my screen, it's not like that. My chart is that blue and white color, and I actually don't show the money. I have just this hidden because, I don't want that to be messing with me psychologically. Seeing this number in real time go up and down, especially as I get larger and larger size over time, it becomes really hard to, manage those emotions. And so here, I like to generally go for about 3x, but again, over time, I've got a little more looser with my management style of seeing what the market does to manage my trades and scale out. But when you first start out, I would 100% stick with more of a fixed profit target. You could just get out at 2x of your profit target. That's a great starting point. And one thing you can see here is I went break even. And so my reasoning for going break even and taking risk off the table was that we broke up here to, where I'm about at 2x. And this orange line right here is actually news coming up. And so this is a news release. And so how I trade news releases is generally I like to avoid them. But if I'm in a trade like this and I know how oil usually responds to this news release, this is just a news release where they post inventories. It's not something crazy news release like in the S&P 500 markets. This news release is just inventories. And I've noticed over time is what this does is it causes some volatility for a couple minutes, but it generally goes in the direction that the trend is already doing. And so, my reasoning is, okay, well, we're already in a downtrend that's shifted. And so I think the overall trend is up and I'm at break even. And so I'm okay holding through some volatility with the idea that I think it's going to produce more directional movement that I want. And so you see it, that's the news release happening right there. And I moved up below the swing with the idea that, okay, that's nice movement. You can see I'm really in the green now and I want to let this thing move. But now that we're, moving really rapidly, you got to start saying, okay, well, I don't want this thing to snap back and I give all that profit up. And so I was kind of seeing that, okay, we're in an uptrend here and I'm looking to scale out 2 contracts with the idea that we might have a little bounce here and it goes up. And so I think I closed out about $1,000 there on that profit. And I still have this one contract with the idea that, well, we had this uptrend and I think we could continue higher. There's a little bit of volatility coming in here. And so I'm going to stay in until I think that it looks like it's going to break this uptrend. And so the market starts to, kind of go sideways here and make essentially I believe it starts to make a little bit of a double bottom here at this trend line. And again, I'm going with my plan is when you're managing, you have to go with a plan of what you're doing and stick to it. You can't go into a trade and change how you're going to do things. And so for me, I think that, okay, this is a great little bounce off this trend line. I think that if it's going to continue with this trend line, it's going to hold right here. And if it's going to, crater and come back down here, lose this momentum, I would rather get out here. And so jump out of that trade right there and I move on with the day. And so one thing I want to show you that I didn't talk about in that last trade is a really massive thing about these trades is understanding the overall market. This setup happens quite often to where you can find trades just about daily. But the thing is the overall market pattern is very, very crucial. And so this trade right here, you can see just going quickly through that checklist again is we're at a support level. That downtrend is broken. And it's made a really, really clean double bottom here. And even, that kind of fake push lower again that fails. And then it's had some strong bullish bars here. And so I jumped in long betting that the market was going to go up here. But I only entered in one contract. And the reason that you want to go into every trade with a mindset of the bigger picture is the thing that matters the most is that is really what governs everything. These micro patterns of, you know, a double bottom happening, a nice candlestick pattern that shows, you know, a strong rejection, those happen all the time. You can find those everywhere. And so, you know, that's why, of course, the first thing is you always need to wait until you're at that key support level from that big picture, but also you need to understand that the overall market pattern and the conditions that the market in are important. To quickly show you what I mean, one is when the market is just not trending at all. Look at this movement right here. This is in the ES futures. This is another market I watch, and you can see that the candlesticks are just all over each other. They're super choppy, not moving around. And what this does is it just makes it so there's less movement possibility in the market. And so this trade right here that I entered in on the NASDAQ, I entered in at 1/3 size. You can see I'm up here, probably about 1.5 to 2x, and my risk on it was way smaller than the last trade. Generally on that last trade, if I was up here, I'd probably be up like $1,000 or $1,200. But because I did smaller size, I'm up less. And the whole reason why I did that is because I thought that the overall market structure was not as good for a good trade. I didn't think that it was likely that the market had a good reversal to where I could capture 3-4 times my risk. You know, maybe I'll capture 1 or 2 times like I'm doing right here. I've already moved up, you know, below this swing right here in terms of managing my stop loss. But the idea is that it's not worth risking a ton of money. You know, I didn't feel like it was worth risking $800 on this overall setup that I was seeing. And that's just because, again, the overall market structure didn't seem like it was there. The biggest thing with these trades is having that room to profit. And so what I mean by having that room to profit is if you look at the market right here, like this one, is okay, if you buy down here, does it really look like the market has the volatility and movement to move up a ton in your favor for where you will get a good trade? Because every time you put on a trade, you are risking losing money and you don't know if it's going to play out. No matter how good, you know, these signals and patterns look, every trade could lose. And so when you're not sure about it, you have to understand that's an important signal and that you should probably risk less. Now, I think it's okay to risk some because the signal's still there. It's still pretty good. Again, you don't know what the market's going to do, but take less risk. And so maybe don't do this right away when you're first starting out. But one thing to think about as well is with scaling in and scaling out is also trading smaller or larger size based on the strategy. Even though I trade one strategy here and it's one specific pattern basically every time, it's still always different every single time. And so if you want a really clean walkthrough of how to start using this strategy and use it in a top-down analysis kind of domino effect style, check out this video right here. It goes into a ton of really good detail on candlesticks and how to use these timeframes together to enter in a really accurate way at the lows and then domino that into higher timeframes and capture really big trades.